TAQ Capital, technical analysis quickly.
This is not financial advice. I am not a financial advisor. Before taking any action based on the information provided on this channel, it is recommended that you seek the advice of a professional licensed financial advisor.
Let's do this.
All right, welcome back to the channel, everyone. Let's dive right into some Bitcoin news. I'm zoomed out here on the daily just to give some more perspective here. We've got the June 18th wedge that happened here. We had a hit, and then we came down, bounced, and then went out, which brought us into the red wedge here. We had our hit, and then we came up. And then we're in the purple wedge where you can see the white arrow here. We had our 4, and we've just bounced off our 4th. So either we're going to go up like this, bounce off the top purple line, come down and out, or we'll do something like this where we don't do the bounce at all. Or there's always the possibility that this is going to have to be moved. We could go lower, for instance. So if these candles just start to flop over and then find a new lower hit, then we would just redraw it, because this would be our, well, this could actually end up being, no, that can't be. That's our second hit no matter what here. Hold on a second. Yeah, this back here could actually end up being the point of contact if we drag down like this. So then you would have your second hit here, and then third is up here, and then we would just drag the 4th to be further down here before we make our break up higher. Something like that. But it's all going to depend on where this 4th hit ends up being. So if it ends up being this one, well, then we've already got it drawn correctly, and we have our 1, 2, 3, 4, and we're going to break up and out. Now, that up and out doesn't necessarily mean we're going to the moon. It could just end up being a flop out like this before we come back down again. But the point is the trajectory of this should be this direction, unless we just have a lot more down to go. So we try to look at smaller wedges to see what that's saying. If we zoom in some more, we've got this red wedge that's developed from when this fell. So it fell down here, and we dropped into the red wedge. You can see that the actual orange wedge is where it hit up here. So you got 1, 2, 3, 4, and then we broke up out of the orange wedge. So the orange wedge is now dead, but that's within the orange. We went off of this hit, the second hit of the orange, to draw the red. And the red wedge is 1, 2, 3. We just had our 4th in this craziness where it changed 6.94% in 1 minute. And then we swoop down, and it looks like we should be doing a swoop down to go out, but the swoop down is comprised of another leg down. So we're doing this now. So this is where I'm trying to figure out what's going on and why it's not a typical swoop that goes like that. And I think that's because we're now in this consolidation symmetrical wedge where we're going to do 1, 2, 3, 4, and then probably break up at that point. But a key factor to remember is if I kick on the Bollinger Bands here, as well as the Ichimoku cloud, we had this massive breakout on the 4-hour. Okay, we've got nothing up here to where we broke out of the 4-hour. We now have this little tick up out of the 4-hour on the opposite side, but then we have an enormous breakdown here as well. So we are favoring the downside, but it doesn't mean that, yes, we were in a downward trend, of course we are, but it doesn't mean so much that the downward trend is going to continue. What it means is, to me anyway, we're looking at a reversal here. We've come down so hard and so fast that we should be reversing. We've got a 4-hour breakout here, we've got a 4-hour breakout here, and a 4-hour breakout here. And if you look at these two breakouts, and I bring up the RSI, you can see in these white circles, there's the yellow lines. Those yellow lines are showing us that they're opposite trend. We've got a lower low here, but we've got a higher low here. So this just means that that's bullish divergence, and we should be breaking up the other way. Now, arguably, we did exactly that, and that's already gone. And that was this run up here. And now we're just waiting to find out what else it's going to tell us. But I'm not sure that that was it for that run. I don't think that it is. I think we're just doing some sideways action in this symmetrical wedge, and then we're going to go up from there. So if we look at other things like fib circles and fib channels and so on. Like the fib channels are the gray lines here in the background that you see drawn different diagonals that intersect each other. The fib circles I don't have on right now because they bog my chart down so much. But if I do turn those on here and I zoom way out, this looks insane. I mean, that's how many circles I have. Specifically, I think I have 6. But this is what I covered in a previous video. If you look at them individually, they make perfect sense. Like you can see how this one respects the ring. Price action again is respecting the ring. I mean, this was the June 18th run right here. Again, totally respecting the ring. Also respecting the ring. Doing the same thing here. And you can see that we're right up on it. And also respecting the ring, and we're right up on it. So these last two are the ones I'm going to zoom in on here. Okay, so we just broke through this ring. Well, first off, on this green candle here, you know what? Let me zoom in more. You can see that we found support. I mean, it pulled this wick all the way back up and stayed over it. Then it fell through, couldn't keep it up. Fell down even lower, came up, tested the ring again, but got rejected. So now we've gone up again, tested the ring again, got rejected. And now we're currently in that rejection. So that's one ring. We now have official resistance above our candles. Now here's the second ring I wanted to look at. We are 1, 2, 3, maybe 4 if we start going up here a bit. But I don't think so based on the other ring. So I'd say we're about 3 days away from crossing this ring. So let's first go back to the other ring to see how it was respected on the other ring. Well, here, as we broke through it, we had support, went up, got rejected, down here support, went back up, got rejected, down here support, bounced, and when we broke through it, we came crashing down. This was our June 18th run here, and now we broke down out of it. So we've just broken through the ring. So we would think that we're now looking for a breakdown to the next level. Now this is $0, so it's not going to happen that way. Actually, that's negative 4,000. So it can't happen that way. So instead, we're going to be looking at some sideways action like this. We may come down here, hit the $7,000 mark and come back up, and then maybe ride the ring up, which does happen. I think it actually happened on this one. 1 second. Actually, no, on this one, we shot straight up, broke through it, and then rode the ring down. But yeah, you ride the rings. And on the next ring I showed you, you'll see that we did the same thing. We sort of did it here. Stayed with the ring, we rode that ring up a bit. So now here's the ring that we're approaching. You can kind of see that we rode this ring up here, and then we found support again on the ring there, support here, and you can see how we just are bouncing off of these rings. Well, the last ring that we broke through, or the second to last ring, and then the last ring, let's zoom in on those. Okay, we found resistance on this ring, but as soon as we broke through this ring, we shot up. We rode the ring up here, and then once we got through it, we went straight up again, got rejected off it, and bounced down. So we've got a rejection and then 2 runs. So on this ring, it's not really telling us exactly what to expect. However, on the last 2, these 2, we had bullish runs. So we could be breaking straight up for a little bit, and then that'll give us our tanking down, something like this, before we maybe ride that back up again. I mean, how we crossed this divide, obviously, I don't know. But you can see that we've got the last 2 rings. When we met the ring, it was bullish activity. Now, if you look at this ring, which was the other of the 2 rings, we were rejected on this ring. We found support, but when we broke through it, we came crashing down. So here, when we break through, we would expect to come crashing down. So, and you can see now that it's acting as very strong resistance, and it's not letting us back above it. So we could be now facing a dump in the next few days. Because again, if I turn on the other ring as well, we're a couple days out here from crossing that, and then you're going to have this resistance here as well. So if we break through here and we run up, we're going to have a major issue with the ring here, which means if we run up, it's going to be very short-lived, and then we're going to come back down again. So dropping to the 4-hour and looking at all the evidence that we have, we're in this symmetrical wedge right now. So we've got our 1, 2, 3, 4. we can break either up or down out of this thing. So we could be looking at a little jump up there and a flop, or we could be looking at bouncing up this way and maybe a slight bounce there before we go up. So right now it's a sit tight. And the reason why I say sit tight is because this, symmetrical wedge, if there's more downside, would just change. You would drag this down, something like that, and now you've got a downward wedge, a descending wedge. So then your fourth ends up being way down here, and then you end up going up. And see, now if it was a steep fall and we did hit right here, you could see that this is the ring. So once we broke through the ring, then we might run up the other side of the ring, which we did the last 2 times on this particular ring. If we try to get some sort of idea out of this point and this point, we would need to run another line above it, like this. So then we would have our first hit, our second hit, our third hit, and then if we end up doing this bounce off of here and going up, we'd have our fourth hit. And because this is a downward wedge, we would do something along the lines like this and break up, which falls in line with the red wedge. So you can kind of see how we would break up out of the symmetrical, hitting the yellow and going to the red. And the red right now has reshaped itself several times, because the first one was like this. We had our 1, 2, 3, and then 4. And then I thought we were going to swoop down and up. And we swooped down all right, but we actually went lower. So I had to lower this line down here to meet that, which then took it away from back here. So then I had to reshape the wedge and the trajectory to look like this. And when this became 3, we knew that this was no longer 4. So I had to move this red line up a little bit. So now with the red line moved up, we have to come back down. Well, we don't have to come back down. I mean, theoretically, we could have just, blown straight through the thing up here, but that didn't happen, obviously. So now we're looking at a swoop down and out. So we're going to have something like this and back up. But this is the swoop that's actually taking a whole lot longer than I anticipated. And we're looking at, more of a zigzag in this symmetrical wedge before we decide to go back up. And then this W pattern that we're forming here is going to, you take a line straight across here, then you take the distance from here down to the base and you run that up. So that'll look like this. So if this is the bottom and this is the top, we would then take the measurement and drag it up out here to see where we break up. So if we break out of here, we'd be looking at going to, 20,709-ish, which would actually have us probably running up this ring. Because I would find it very hard to believe that if we break through this, we're going to then run up the ring past this other ring, because this is also resistance. So if we make it somewhere up here and then break through and crash down, we might find some support here before we then crash down again. So I think looking at everything, we're probably going to be dealing with some short-term bullish action that'll take us up this ring, through, down, across, and down and out. And that's the best I've got looking at everything that we've got. Oh, we can also bring in the Ichimoku cloud real quick. Okay, so keeping in mind the symmetrical wedge and the possibility that we're going to go up straight through the top of it here over the next, the rest of the day, essentially. If we jump to the daily, the symmetrical wedge looks very different. Obviously, there's only 3 candles in it. But if we can get this candle to go back up to maybe even a wick, where it's majority wick down by the end of the day, then our next candle, our next daily candle, could be green and going up like this. So then, we'll have our next one and our next one and so on. So over the next 3 days here, it would fall in line with the Ichimoku cloud, which says it's swooping down like this. So if I turn off the W pattern, kill the wedges, you can see that as this swoops down, if we can get the candle above it, so if we can close above the Ichimoku cloud here, then it'll start to be swooped up to the Tenkin. Sorry. If we can get it up into the cloud between the Tenkin and the Kijin, the Tenkin will swoop the candle up to the Kijin, which goes also in line with the narrative that we're going to have some bullish action before we break through and come back down. If we zoom out even more, we have the weekly candle below the Tenkin, which you can see it sort of struggles to get above. You know, it managed to break above here, then fell back under, is unable to get up, is unable to get up, is unable to get up, breaks through a little bit, falls right back down, and so on. So we're kind of hanging out below the Tenkin at the moment. You can also see that the Bollinger Bands are kind of coming down into forming this channel. And then when that happens, the pressure builds before we have another major move. And that could happen, I mean, realistically at any time, because you can see as we started to get close here, back on this one, that's when we had that downward cross, dropped out, and just kept doing that down. If we drop to the 6-day, we can see that we're even further along into getting into that tunnel. And I would imagine that the 5-day is going to be even more so. So the 5-day, we're actually in the tunnel. See, and we've had this little poke out here. So this could actually allow us to compensate up, but I mean, maybe not yet. And you can see too, when we jump around here, like the 5-day, right? The 5-day shows the candle on the other side of this ring already. Whereas when you zoom in, you're not on the other side of the ring yet. So it's not an exact science necessarily about the ring. I mean, if you switch to the daily, you're a few days out. And generally, I look at the daily when it comes to the rings, first and foremost, and then I set them up based on those. The daily is the one you really want to pay attention to. So even though we're across on the 5-day, I'm looking more so at the daily. You drop down to the 4-day, we're in the tunnel. 3-day, we're very much in the tunnel. And I think because we've come up back here, you know, and hit, then come down and hit, I think even though we're kind of retesting it, we haven't hit yet, we'll be looking more about going up to the other side of this. Now that's 27,000. And I mean, realistically, anything's possible. If we shoot up first, then that could be the way that it goes. So if you recall from my other Bitcoin video or videos in the past where I talked about these wedges, we have this giant wedge that we're in here. This green one, which was a 1, 2, 3. Originally it was 4 for a swoop down and out, but we set a new 4th here. So that's 4, and it's now a swoop down and out. We could certainly set a new one, but if this breaks us up, I mean, we could hit the 20,700, you know, easily on the other side of this green line. So even the green is kind of showing us that we're going to be going up and out. And of course, the purple line here is the one we've been in since the peak of the market. So we're potentially going to break through that as well. But, you know, we could have a rejection on the pink and purple, like somewhere in here. And then now we've got to do a swing down and out before we get out of the purple and then the green. I feel like, you know, these setting of these new points along the way don't happen more than 3 times. So we could have one more here, but it's seldom that it even happens to 2. But I hope what you got out of this is that looking at everything, there's a lot of indicators that point to up. I mean, even this pink wedge, we hit here, there, here, and now if we swing up, we'll be going somewhere up in that vicinity, but we don't necessarily know where. I mean, this is getting close to the 30,000, so that could definitely be, you know, too much, and that's not going to happen, because as much as I think we're going to be going lower and getting down to that $7,000 mark, that doesn't make me right. I just think that that's the way it is, and I'm trying to look at things objectively and not just be opinionated. So if we change this wedge a little bit more, you know, we could have the point be back here, our second hit. So this is our 3rd hit, and then our 4th hit could break up. But now the pink, if it sits this way, is going to be a symmetrical wedge, and it could break up or down. So let's say that it goes up, breaks up out of the green, breaks up out of the purple, hits the pink, and then just gets rejected, a huge dump. Also possible, and that still gives us our $7,000 mark. But, like I said, I'm talking short term. I think we're short term bullish. And then I can reassess the situation once we're done with that and see who's going to take, if the bears are going to take over or if we're going to continue up on a bull run. But that's it for me today, guys. I appreciate you watching. If you find this information valuable, please like, share, and subscribe. And I'll catch you in the next video. Good luck out there.